Fam, how's everybody doing? Hope everybody had a great day. We know what time it is. Time to get into DR for today. And just remember, we're doing some advanced stuff. So if you're not used to the regular DR, make sure you check out the playlist that kind of talks through the 1, 2, 3 ladder strategy. That's kind of our basic premise for our DR strategy, or the DR strategy I use. But some of this will be a little more advanced. But let's talk about it. All right, so I want to show this picture here because this was, we had the Asian range last night, or in DR parlance, that's the ADR or the after DR. Then we have the ODR, which is the London session or the overnight DR, and then here we have start of the RDR, which is the regular DR session or the New York session. But notice something here, how every DR from last night just kept moving higher and higher from a price standpoint. So this is what we call an expansion range, right? So anytime that we have a DR and it just keeps moving up, so that's called expansion, and you can kind of almost, be, I don't give a percentage to it, but you can almost be assured that price will continue to move up during these sessions, right? So if you're looking at ADR, notice we have a sell side liquidity here. It actually never came back and even touched that sell side liquidity. It just kept moving up. Midnight open, we came back and touched midnight, but then we kept moving up. And so you can kind of use that as leverage. And it wasn't even sure. We had, of course, we had CPI today, so that was a major news event, and you kind of see what happened here. But we'll talk a little bit more about this. Just wanted to point out, kind of, you can start to see, when you have these types of movements, you kind of start to make a little bit of an assumption as to what price is going to do. All right. So let's see if there's anything interesting on these. Again, kind of standard DR stuff here. And I'm not going to, I'll zoom into this one really quick if we can. All right. So we had no range on the ADR. I did not trade that last night. Could have gotten a couple of points out of it. And points are points, but wasn't worth me staying up to do that. And then kind of similar with the ODR, definitely could have taken trades here. Not huge range, but could have gotten some points here, right? So if we're in a scalping mode, then these are easy trades to take. You can take 1 or 2 points, and based on how many contracts you have, that's still a couple $100 you can get in pretty short amount of time. All right, so let's dive into the RDR, which is the New York. Let's make this bigger so we can kind of play around with it a little bit, see what's going on. Okay. Now today was fun for me because there's some days where you could just know what's going to happen, right? And honestly, for me, today was one of those days where I just knew what was going to happen, and was able to kind of capitalize on some of that as well. Still doing my training during the morning, so when I get a little break, that's when I can jump in and look at things. But again, we had CPI, and so if you think about it, CPI was lower than forecast. Okay, so you think about it, well, why would the market react positively to that if we're lower than forecast? And you gotta remember what the Fed is trying to do. The Fed's trying to get interest rates down, and so so CPI, Consumer Price Index. So if it's lower, that means that people are not spending as much money as they would forecast to spend. And so it's an inverse relationship. So that's a positive for the market in the current environment that we're in with the Fed, right? So if CPI had come in higher than forecast, meaning people are spending more money than forecast, then I'm sure we'd saw a pretty big drop in the price. All right. So again, note, I didn't trade the news, of course. Let that play itself out. Had a nice opportunity here. If you were looking at ICT, came down, or ICT strategy, came down, tested that fair value gap that formed based off of the CPI news, and then just kind of either rode that back up. So that's a nice, again, a nice way to combine the trade or the strategy with ICT concepts. All right. So now let's go and talk about what DR did. Now, if you notice, DR we start talking about these this trend now. So DR actually trended higher. So my initial bias was that we should be going higher. Now, why I was a little skittish about that was because of this huge pink block right here. This is actually a weekly bearish fair value gap, and this thing goes all the way up. Oh gosh. Wow, let's go. I won't even show it to you, but 4611 is the top of this block. So that's a massive fair value gap on a weekly basis for us to, or weekly basis for us to get through, for us to go higher. Okay, so what was cool about today, that's what you say, you can kind of start seeing things before they happen. My bias was for price to go up, but I literally said, hey, we got this bottom of this fair value gap right here, this bearish fair value gap at 45.22, and I was expecting some things not to work out there, right? So, all right, let's back up a bit. Let's go range 45.06, 45.07 to 45.22. So a pretty decent size range, about 15 points, 16 points or so in there. All right. One thing I want to show you, where was it? There was a fair value gap. It got filled in, that's why I took it out. But there's a fair value gap right here. Let me draw this out real quick, because this comes back into play. And this is where, you know, again, knowing kind of how these, if I can get to work right, let me just do it this way. Knowing how these should work, and let's make that a positive, and we can just scale it up a little bit here. So maybe not. Let's just do it from there. Okay, that's good enough. Okay, so we had again another nice fair value gap here off of this candle. So price comes down, test it. You could have actually jumped in a trade here if you're trying to get aggressive, right? So you know, understand what those gaps are and how to leverage those. The next one. So again, we're not even talking about the DR confirming yet. All right, so didn't expect it to confirm until a little bit later, because once we got here, you see we tested the DR. That is a little gap here between DR and IDR. So this one again, it went up, it touched the bottom of that bearish fair value gap for the weekly, and then just rejected off of that. Okay, so definitely a way to you know, you can say there's a pretty good opportunity or a pretty good probability that we're going to reject off of that. Now, I thought it would have went deeper into this fair value gap, because again, this is a massive fair value gap, bearish. I thought it would have went deeper, but it just touched it and then came back down. Okay, so really interesting how that played out today, and I don't think we actually went back and tested it again yet. All right, so one thing to notice here. So you could have, some people I know did take this trade off of this rejection here, and that's a pretty good trade here. I actually was still under the impression or under the thought process that price would go up. So once price came back down and tested that fair value gap again, okay, again, this is bullish fair value gap. So for me, it was really easy. Drop an order here, right on the I think it was 45.15. And then let that ride up to 45.20, right? So literally, and now also you notice here there's a bearish fair value gap. And this is all on the 5 minute, right? So bearish fair value gap here, and what my expectation was that we were going to reject off of that. If we didn't reject off of this one, we'd come up and reject off of this one. Okay, so I left my order at 5 points. It just touched 5 and, you know, sold, and I was like, yay, happy. All right. Now what I didn't do, which some of my friends did, is actually, you could have actually, because now I'm on this bearish fair value gap here, you could actually put an order here to go back down. Okay, because we haven't confirmed yet, so there's no bias right now from me that would say don't do this. And so we had some folks that actually just took this trade and rode it all the way down. So really smart play here. Okay, and all right. But I didn't do that. Okay, so, but again, really good trade. Again, notice here also from yesterday, we have one of those fibs. I can't even remember which one it is. Probably a 1.0 fib. Price comes down and rejects off of that fib. So again, another something you could look at. Kind of did the same thing over here. All right. Now let's see, the next area that I want to look at. Let me zoom in a little bit here. Let's put the whole chart up. Okay. So there, you could have done some. There's some trades you could have taken in here. I didn't take any of these trades. I think I was actually driving to work. The next one that I should have taken. Okay, and this is where it gets a little frustrating sometimes because so we confirmed low. Okay, we went back up and retraced. All right. I should turn my arrows on so I can remember what trades I actually did today. But we went back down, retraced up. All right, and that's what I want to tell you guys. Okay, hold on. Sorry, guys. I'm remembering what I need to remember now. Okay, here is another. This is a bullish fair value gap. All right, why do you keep talking about these fair value gaps? Okay, because this is how you can get kind of meld strategies together. Okay, price comes down. Right, we confirm. Okay, we went all the way down. Like, wow, that's a pretty big drop. We went right back up, right above the DR low. Okay, but what I saw up here was we had the IDR, right, that red dash line, and we also have this bearish fair value gap. So that's a really good area of confluence for price to come back down. So what I was expecting was price to move back up into that fair value gap, right? Touch or take out the IDR low and then come back down. And so I literally actually put in one of my groups like, I'm tempted to take a trade right here, right on the DR low, because that's what my strategy is, right? Is to take it when it goes above, put my order on it, and then take it to, in this case, come back down. But I was like, nope, I'm going to hold on. I'm going to wait for it to come back up here. And of course it didn't. So I should just follow my rules, basically. And again, I didn't do it that time. Because the worst case would have happened was if I would have put an order on here and it kept going up, that's maybe a 3-point, I could have gotten out at 3 points or whatever, or it would have gone up here and then come back down, right? So I missed this trade right here. That's one I missed. Okay, so just a lesson for me, right? I was trying to be cautious, which that's not my normal style. Normally I'm very aggressive. This case I'm like, I'm going to outsmart the market, and the market outsmarted me as it normally would for any of us. All right. Okay, so that was that trade, and I don't think I trade any of this other stuff here until we get up to here. Okay, so this was actually my my trade of the day for me was all right. Again, we have our 0.5 fib here, this blue line. Okay, we went up here, and what I want you to notice that right at 45.16, we had 4 times it touched 45.16 and rejected off of that. Let me make that bigger so you guys can see it, okay, because that's important. So 1, 2, 3, 4 times went up to 45.16, couldn't break through. Now don't forget, we have a fair value gap, a bearish fair value gap sitting over here as well, right? So if I'm looking at 45.16, that's right in that fair value gap, okay? So one thing I've started doing, and this is, I used to use the indicator. There's a very nice Nephew Sam indicator for fair value gaps, but it doesn't go out far enough, or you have to go all the way out. So I've started to kind of draw these out a little further so I can understand where they're at. But in this case, I didn't even see that initially. What I saw was 4 times it tested 45.16. So my immediate thought is it doesn't want to go above that. Once it came down again, order is here at 45.15, okay? And then let it come down. The first one was 45.10. All right, so I had 2 contracts on this one, so I got out at 5 points here, and then we, when we saw, again we tested. This time we're testing 45.12, for a bunch of times, and so I had that second contract that just let it play itself out down here. Got out at 45.05, I believe, and yeah, could have taken it down to 4,500, but was, it was getting close to 330, and I was like, I don't like to trade really futures kind of after 330. I don't really like to do that. All right, so again, kind of fun day, and again, saw a lot of this setting up before it set up, and was able to call these out in one of my Discord channels, so people can understand kind of what was happening, or at least my thought process on some of this. right? And so let's see, didn't do any of this stuff here. Price came up. We had a fair value gap. You could have gotten a few points on here, but that's at 4 o'clock, so you're not. I didn't see really opportunity there unless you were in this trade right here. But overall, a good day, and we start understanding kind of what's happening with the market. All right, here, basically it was either we're going to go up and get this fair value gap, and reject off of it, or we're going to confirm high, and we didn't confirm high, we went down. Here, we're in this fair value gap here, we're going to go up, and we're going to get to this fair value gap, take your profits, get out. Okay, could have jumped in right on a bearish trade and for it to come down and gotten pretty good amount of points here. Could have taken this trade in a true DR low trade right here and gotten a pretty good return. So you can kind of see, it's just opportunities are just, there are a lot of opportunities throughout the day. And one thing I'll say is as I'm getting more aggressive because my time is a little shorter, I'm finding myself to be a much more focused trader because I'm looking and I'm not trying to, okay, I'm gonna stay in this for 5 points. I'm staying this for 10 points. I'm gonna do this, right? If I see those opportunities, like if I'm doing an aggressive trade, but I'm in a DR, right? That's where my normal trade would be. Yeah, I'm gonna sit there and let it go for 5-10 points because that's what a trade should do. But if I'm in one of these trades and I'm saying, okay, you know what? I just want to get a couple of points out of that. I just put on a couple more contracts and I'm in good shape there, at least for me. Okay, not telling you guys to do that. I don't want anybody to go off and do that because you can lose a lot of money very fast. But again, I'm fine taking 1 point. All right, that's just me. And so if I'm fine losing a point, I'm fine losing 3 points because I know I'm going to make it back up at some point during the day. If not that day, then definitely the next day. All right. So anyway, overall good day. Hope you guys had the same. I'm enjoying kind of how I'm trading right now, but there's still a lot of opportunities for me to still get better. And I'm sure we'll never master this thing, right? But it's just a matter of getting better. All right. I look at it like how I play golf. Yeah, you can suck for 17 holes, and on your last hole you hit a great shot, and you'll be back tomorrow, right? And vice versa. You can play well for 12 holes and then and lose your whole round in 5 holes, 6 holes, right? So anyway, so same kind of thing here, but again, just keep stick to your plan. Keep doing what you're doing. Just make sure you're committed to it, and don't do like I do sometimes and keep moving my stops around and stuff like that. It's just not worth it. Get out and get back in when you can. All right. Hope everybody again doing well. Love on your family. You never know when you're not going to be able to do that again, so take advantage of it. All right. God bless, and we will talk to you tomorrow.